Welcome to the Print Live. We are here to talk about Finance Minister Nirmala Sitharaman's announcement about corporate tax cuts. So the Finance Minister is in Goa today for the GST Council meet. Ahead of the GST Council meet, she announced a surprise tax cut for corporates. So these are not small tax cuts. She has announced substantial tax cuts for corporates. So what she has announced is that the corporate tax rate will now be reduced to 22% from 30%. So many large corporates will benefit from this because some smaller companies were already at a 25% tax rate. It's not, so what will be the effective tax rate now for companies? The effective tax rate will be around 25% as against 35% that was there earlier. Another thing that she announced was on how new companies who will invest in manufacturing will get a lower rate even from the 22%. So new companies who are incorporated after 1st October 2019 for the purpose of undertaking manufacturing will get a tax rate of 15%. This would mean an effective tax rate of 17%. Right now the tax rate was around 25% for new companies who are looking to enter manufacturing. There are like two conditions for these tax cuts. The first condition is that none of these companies will be should avail any exemptions or tax holidays that the government provides. So you can avail these lower tax rates as long as you don't opt for any exemptions or tax holidays. One advantage is that you even don't have to pay the minimum alternate tax that the government typically levies. So companies have this option. Another thing that she announced was that what happens for companies who are already enjoying tax holidays and exemptions and their tax rates may be much below 22%. So it doesn't make any sense for them to move to this tax regime. So these companies have been given the option of moving to this lower tax rate once their exemptions or the time period of their exemptions or the tax holiday expires. So these have another thing that she has announced is how the minimum alternate tax, that rate has been reduced to 15% from 18.5%. So these are the steps that she has announced for companies. They are mainly aimed at promoting investment and encouraging these investments in the manufacturing sector. So what we are here to talk about is what does this mean for the economy, because eventually there have been no tax cuts that have been announced for like the normal normal individuals, right? So there is no tax cut in the personal income tax rate slab. So what does this mean for the Indian economy? So right now the Indian economy is seeing a slowdown from on two counts. One is the investment slowdown and one is the slowdown when it comes to consumption, specifically retail consumption. So the GDP numbers that came in for the June ended quarter showed that the economy had grown at 5%, but worryingly it showed that the private final consumption expenditure or the money that households spent to buy things has grown by only 3%. This was around 7% the year before. So obviously there's been a sharp fall in consumption demand. So does this kind of a tax cut for corporates help increase consumption demand? Not really. What happens is there are like two aspects to it. So probably when companies are getting this advantage of a lower tax rate, they may decide to step up production, they may decide to set up new manufacturing facilities, but what do they do with their output? So there are two places where they can really sell their output. One is exports and one is domestic demand. Domestic demand is weak. There's hardly any consumer demand, as you can see from the sharp fall in sales, or in fact a contraction in sales in automobile sector as well as what is being seen in the FMCG sector. So domestic demand is really low. The other option is exports. But again on the export front, the global economy is slowing down. There is a lot of uncertainty given the whole US-China trade wars. Because of this, even exports are not picking up or remained largely flat over the last few years. So then there are like no options for these companies. Even if they produce more, how will they sell? So that is like one problem that this kind of a scenario has. So there's been a massive supply side push, but what happens to demand on the demand side? That's what economists are asking right now. Another thing is that what the government, the whole package that she has announced today will cost around 1.45 lakh crore annually to the exchequer. So there are also concerns of how will this impact the fiscal deficit. So obviously, the government has got a windfall of 1.76 lakh crore from the Reserve Bank of India. So it is kind of partially offsetting this kind of a revenue foregone or the loss to the exchequer because of these measures. So that is one thing that, okay, there is some kind of a cushion, but again tax revenues are slowing down because there is hardly any growth. Our sectors and companies are hardly seeing any in the growth in their revenues or profitability. So because of which tax collections both on the goods and services tax side and on the direct tax side are falling. So these are like two concerns that are there with this kind of a an announcement. So please do send us your questions and we'll be happy to answer them to the best of our capability. So Natarajan is asking, will this really help to establish employment-oriented manufacturing industries in an era use of robots to reduce workforce and cost, that too large chunk are waiting for a job? It's an interesting question, because what the provision says is companies who are incorporated on or after 1st October 2019 but start manufacturing before 2023 have been given this kind of an option. There is, as far as I have seen, we will have to wait for the ordinance and the notifications. There is no clause of whether it should be a labor intensive manufacturing industry or it should be the number of people it should employ. There are no such criteria that have been put in. So obviously it is possible that companies don't opt for labor intensive manufacturing, and as you rightly pointed out that they may look for more this kind of more capital intensive production. So yes, that's always a problem, and that has been the talk for like a few years, right? Where it does help, probably labor intensive right now we see more in terms of the services industry where labor is still in demand, but obviously it has been coming down in the manufacturing industry. So yes, that's a very valid concern that you have. So the FM today also announced a few measures to kind of roll back her announcements when it came to the super rich surcharge on foreign portfolio investors. So the levied on capital gains. These announcements have seen the stock market zoom by more than 2,000 points. I don't know how the markets have ended now, but in mid trade they were almost up 2,000 points. So the markets have welcomed this announcement. So far all the announcements that have been made by the FM when it came to addressing some sectoral issues relating to automobiles or related to housing were seen as piecemeal measures. Basically, industry felt that it fell short of expectations. It didn't address the concerns of the industry. But now this kind of an announcement of a corporate tax cut encompasses all industry. So it kind of benefits everyone, and everyone is like welcoming this and saying that, oh, how the animal spirits of the economy are now going to be revived, and you could see major investments coming into major investments being made both by domestic industry as well as a lot of investment flowing in the form of FDI and FII into the country. The next question that we have is from Pramit, who says that now that the tax cuts are done, will there be further tax cuts in the GST Council meeting? So unlikely that there are going to be any more tax cuts in the GST Council meeting, because GST revenues are shared between both the center and the states. The minute there was this whole talk of how the tax cuts should be, GST rate should be cut for automobiles, many states were up in arms. These include states like Kerala and Tamil Nadu, who openly opposed any such move and pointed out on how the effective tax rate in automobiles right now under the GST regime is much lower than the plus 35% around taxes that were there during the excise and the sales tax regime. So because of that, states have already opposed this. Another factor that comes into play is that GST revenues have not been picking up. They have remained around the 1 lakh crore mark and much below the budgeted targets. Because of this, states have been really wary of any further tax cuts, and the question that they raise is, why automobiles, or why some FMCG goods? Why couldn't we not cut rates for the lower category items? Why go and cut rates for something that is considered luxury by the states? So that has been one thing. So it may not be easy for the government also to push this kind of a measure, and I think from what we have seen, way in the morning the announcement that have been made and that hit, the fiscal hit that the government will take. So, all these measures will mean that the government will lose revenues to the tune of 1.45 lakh crore annually. Given the fact that, India plans to stick to 3.3% of fiscal deficit as of 2019-20, they may not have any more scope to go for further cuts, especially in the GST rates. The next question that we have is from Akash. He's asking, is there any special SOP for mobile phone manufacturers? Is that segment hurt due to the slowdown? So, the announcements made today are not sector agnostic. So, this steps, the 22% tax rate is for across for all companies irrespective of their size and irrespective of the sectors that they operate. So, all existing companies benefit. When it comes to new companies, yes, they have provided specific SOPs for new companies who want to venture into the manufacturing sector. So, any industry can benefit as long as they are going to set up a unit and have concrete plans to start production by March 2023. The next question is from Satish, who's asking, are there tax cuts for businesses that are sole proprietorships and partnerships? Very few households are invested in joint stock companies. So, the definition, we haven't been able to see the definition because the ordinance has still not been put up. But what we could figure out is all entities which are classified as companies will benefit from this move. Vishal is asking, how does reduction in corporate tax affect the general consumer? So, as I was saying, corporate tax cuts mean that the companies have to pay lower taxes. This means that they will become more competitive when it comes to other countries. So, India's tax rate was considered to be very high when it came to when you compared Indian tax rates to other taxes levied by other countries. So, yes, Indian industry has become more competitive. It would mean that they would want to step up their manufacturing capabilities, set up more units. This would also mean that it would help in creation of more jobs and obviously more incomes in the hands of the people. But right now there is no direct impact for consumers because there has been no announcement of, say, a GST rate cut or a rate cut in personal income taxes. So, there is no direct impact as of now. But if companies do step up investment, you could see more job creation, which would eventually increase the money in the hands of the people. Akash Shah is asking if can you elaborate on the condition of companies claiming tax exemptions or tax holidays in today's announcement? Yeah, so what they have talked about is that say if you are a company right now which is availing tax exemptions or tax holidays and your effective tax rate will be much lower than 25% or 22%, you have the option of sticking with the current regime and not opting for the lower tax rate of 22%. You can continue with this regime till you feel the need to transfer to the regime where you will claim no exemptions. So, that could be, you could wait till the expiry of your exemptions or your sunset clause and then transfer to this 22% tax rate where you get no exemptions. But you have to make up your mind. So, what they are saying is once companies do decide to stop claiming any exemptions or tax holidays, then they have to opt for this 22% rate, and once they opt for this rate, they cannot go back into a regime where they start claiming exemptions. So, once you decide to claim that you decide that you don't want to claim exemptions, then you have to continue with that. So, that's pretty generous because the government is giving the option to existing companies who do enjoy a lot of tax holidays. So you get a lot of tax holidays, sector specific tax holidays. For instance, if a company is undertaking R&D, research and development activities, you get some kind of a tax benefit there. Then there are a lot of benefits when it comes to operating in certain states like Himachal Pradesh and other states. So these are the kind of tax exemptions that typically many sectors get. There was a time when a lot of renewable energy sectors were getting some kind of an exemption. So these are so typically a tax holiday or an exemption is given to promote a particular sector. Typically a nascent sector where investments, corporates are wary of making investments. Abhilash Narayan is asking, will this move improve the GDP in the current quarter or the next one? Most likely the improvement in sentiments will only be reflected in the next quarter, because the current quarter is going to end in another 10 days. So you are effectively talking about less than 7 to 8 working days. Because of this, and most of these announcements will kick into effect only by, so companies will start registering only by 1st October, but it does help in improving sentiments. This has come at the time when your festival season is starting, and at this time, consumer sentiment has become really important. The government wants consumers to go out and spend money during this festival season. So you will have Dussehra on October 8th and followed by Diwali on October 27th. That is considered to be the peak demand season for many companies. So all of your auto manufacturers, all of your FMCG durable goods manufacturers are eagerly hoping that this season sees a pick up in demand. So in those ways, this is actually a boost to investor sentiment and consumer sentiment, but you will have to wait for another quarter to probably start seeing some kind of an impact on the GDP numbers. The next. Nikhil is asking, will this in any way affect agri sector anyway in terms of advantages? So as I said, it's not really sector specific. The kind of SOPs that they have announced is for across sectors. All sectors will benefit from this kind of a move. But obviously, if you're a new company and you're like looking to get the lower tax rate of 15%, then you have to opt for something in the manufacturing sector. That's all we have for now. Thank you for joining us. This is Remy and I for ThePrint. Please do subscribe to our YouTube channel.